The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw a fairly quiet grain market overall on the day Thursday. Livestock had a really strong up day, though. Nice rebound in cattle. Hogs moved higher, too. Markets, grains, and livestock closing a bit early, as we remember former President Jimmy Carter on Thursday, and closing a little early ahead of a key USDA report drop on Friday. Let's talk about the market trade. Joining us, Brian Doherty, Senior Market Advisor with Total Farm Marketing. Brian, good to catch up with you. A slightly shortened session for folks in the markets and in the ag industry on Thursday. And, really all in all, this whole entire week, grain-wise anyway, has been pretty quiet, Brian.
Yeah, watching paint dry might be the term that many might use, because there just hasn't been a whole lot of activity. So today, a nice close, shortened day, as you said, in honor of President Carter. Carter's passing, 456 on the March corn there, and that's just where we've been, and where the market sits. If we look backward a little bit, go back to last May, the market peaked. It bottomed in August. And a lot of times you kind of hope the market can make it back 50%. And that's right where the market is. The funds are strongly long, according to the Commitment of Traders report, 228,000 contracts as of the last Commitment of Traders. Remember, there's always a little bit of a lag time there between when that report is released and what it represents. But the bigger picture perspective I want to make sure and mention here is that from the long-term view, it's a market that sees lots of farmers selling, but at the same time, a lot of fund buying. So it's at a stalemate right now.
It's kind of an interesting dynamic, I think, to your point, as we set up for what is always a very volatile report, the January set of data from USDA. There's so much that comes out with this report. I'd say it's one of the top 2 or 3 of the year that it can whipsaw the markets. Can it, Brian?
It can, and part of that reason is as time has gone by. So I was explaining this to someone this morning that for those of us who've been around a little bit of a while, boy, the January report was basically a rubber stamp of the November report, which was maybe a slight tweak from the October crop estimate. But as we've gotten more and more, as the production side has gotten bigger and bigger, your variance can change into late fall, in particular with yield and what that looks like. So where I'm going with that, to drop corn, let's say 2 bushels an acre, that's kind of a small deal when you compare, years ago we'd have 120 bushels an acre dropping to it, a little bit more impact. But there's a little bit more to that story. It's trying to get a handle on a yield where late season weather has been impactful. In this last year, that drier weather in August, trying to get a handle on that, trying to get a handle on how the wet weather early on in the year impacted. And so the USDA, if you might remember a year ago, added bushels in November and December. So they were, cropped it better than expected. This year, they've had high numbers to begin with, lowered the October number at 184 down to 183.1, and then the average pre-report estimate now is right around that, maybe 182.6. So if there's going to be a surprise somewhere, it might come in the form that the funds are buying for a reason, Jesse. They just think the crop could be a little bit smaller, and that dry down of corn in that I'm going to call it the second half of harvest, may have had impact.
I think it might have. And I've heard a lot of that talk from producers. And, looking earlier in the week, it felt like maybe we had a slight rally back after a big sell off last Friday. Maybe some farmer selling crept in here a little bit. I just wonder, even though the grain markets have been fairly quiet this week, have we seen some pre-report farmers selling, Brian?
We have. And as I talk to farmers, as I talk to my contacts in the industry, what we've seen is a lot of farmers selling corn. Now, are a lot of farmers selling a lot of corn? That I don't know. So in the conversations, we've had farmers say, yeah, I sold 10,000, 5,000, 20,000. I'm not hearing say farmers, so hey, I sold half my crop. They're edging sales into this ever slowly uptrending market. They're rewarding it. They got a core bins. They need cash flow. They don't want this to slip through their fingers. If you might remember, last January was kind of a painful month. Prices started lower at the beginning of the month, got a negative report, just kept going down throughout the month and down into February. In fact, if you might remember the December corn futures for last year, the average price was 466 in December, which is actually better than these 25, but that was down substantially from where the market was. And so farmers are cognizant of that. They need cash flow. They need to move some grain. Nobody's flipping cartwheels at these prices, but they're sure working a lot of angles. And we're seeing some areas of basis improvement that is pulling some corn out of farmers' hands as
South
well.
American, yeah. South American weather, that's continued to be a talking point here, yet it feels like that has largely taken a back seat to whatever we're going to get thrown our way from USDA on Friday, Brian.
You're dead on. So tomorrow we get something, and then the weather in South America takes front and center again. And it just is not the story that has really developed into a full-fledged weather concern. It's acknowledged Argentina's dry, southwest Brazil is dry, but for about a week now, they've continued to add or put moisture in that extended forecast, which would make one really pause to how bullish you can kind of make the argument for weather right now. Might even make the argument for beans a little friendly as too wet in central Brazil. But it's not, in my view, and I don't want to be Debbie Downer here, but it's just today not much of a weather story, and the stagnation in corn prices and beans have indicated that as well. If the market was concerned, it would be buying a lot more aggressively.
Very true. Another thing I want to just maybe get your thoughts on here. Reuters reporting Thursday that the Biden administration is expected to finally release short term guidance on the 45Z clean fuel tax credits. And then they're anticipated to leave the final decisions to President elect Donald Trump's incoming administration. If we get that news on Friday, on top of a bunch of USDA data, is that just another piece that could throw some havoc into the markets? What do you think?
It is, and that could make things volatile tomorrow. And that's a big day tomorrow. And any of this biofuel and how the new administration and tariffs or no tariffs, all of this stuff is really, let's say, all thrown in the cooking pot right now and sort of bubbling. And it's we're not sure any of it's kind of surfaced to really make a big difference at this point, but it needs to be acknowledged. And when I say acknowledge, if I'm a farmer or I'm helping a farmer make a decision, we want to be prepared. We want a scenario plan. So what does it look like with a bunch of friendly news? What does it look like with negative news? What does it look like with neutral news? And then make sure that we're not slipping anywhere along the way. What I'm concerned about in the corn market is you could even get maybe a friendly report, but the funds have built up such a long position that if they all of a sudden lose confidence that the weather's not a problem in South America or there isn't something else out there, they might start to move out of their position. So what takes 4 months to gain 55 or 56 cents, you might get back half of that in 4 weeks. And that's just how the markets work. Sometimes the downs are usually pretty fast. So I've been on that bandwagon. Be strategic. Keep selling corn into this rally. If you want to retain ownership, there's lots of fixed risk strategies to do so. Get some time under your belt. Get out there to July, September, even December. Get some time to be in front of weather. Weather is the key. There's not much weather in the first crop of corn in South America that really, I shouldn't say it really matters. It all matters, but the second crop is where it really counts. And that crop isn't that. You got to harvest the beans first. So we're not even there.
Brian Doherty with Total Farm Marketing is our guest analyst here today on Market Talk. Brian, let's go over to the livestock trade. I want to spend a little bit of time there. Really nice rebound Thursday. Live and feeder cattle led the charge. Hogs had a good day too. A lot of triple-digit gains here. I felt like Wednesday, the cattle markets maybe found some pressure with this talk that Mexican cattle imports are going to start back up later this month. That seemed to be the only thing I really found. Wondering your thoughts on this nice rebound in the cattle market on Thursday.
Yeah, they're very astute. So the news yesterday about imports from Mexico certainly, I think, weighed on the market, right? But we weren't seeing any change to the underlying cash strength that we've seen, which has just been sizzling hot. Looks like holiday disappearance was either stronger than expected or packers just didn't have enough prior to the holiday. Whatever the case, seemed there was a bit of a void there, and up went cash, and just I'm using the word sizzling hot, no pun intended there, but sizzling hot cash market. The choice cuts just blew up. Select over 300, for the well, I'm not sure if it's history or the first time in recent memory at least, but just some really, really solid things there. So yesterday the market pulls back, but the cash didn't, and it kind of left it ripe for buying to come in. And boy, did it ever! It really, ricocheted up today, and feeders too. And again, we continue to be supportive from the supply side. I've been concerned, maybe unjustly, that at some point demand just can't. You're not building new demand markets that I know at these kind of prices. So that means your current demand has to sustain itself or continue to strengthen, and that's not, to me, common sense. It's not likely, but it's a good looking market right now. Cash leading the way.
Hogs have been beat up, and I mentioned a good day for hogs Thursday. Maybe are we finding a little bit of technical footing finally in hog futures, Brian?
I think there's two things. I think we're not only finding the technical footing, you're also finding a big spread that has developed between cattle futures and hog futures. Too wide. You had one going almost straight up and one going straight down. And at some point you're going to get that one that's going straight down to reverse if the first one, that is the live cattle, aren't flipping over, and they haven't flipped over. They were down yesterday, but they didn't do what I'd call flip over, posting a really large, big bearish key reversal, and then follow through today or something like that. We saw a pretty big down day yesterday. Just looked like traders took this as an opportunity to buy. So it's a matter of time before the hog market has to pick up some steam to get more current, or I should say more in line with what's developing in the product markets, which is just better value for pork.
Dairy, any notes for us in that dairy trading lately, Brian?
Yeah, so not a lot today, as we read it now. Slight gains today so far, but the front months are trading over $20. Very noticeable, very encouraging. The butter market has started to pick up a little ground lately. We've wondered why that's been so slack. Now it's at $2.60, and to put this in perspective, oh gosh, back in September it was over $3. So that's a big percentage change, but it is come off the recent lows more under the 250 mark. So we hope butter can rebound. Whey has been sort of a really nice pulley for prices. It's been one of the better markets this year and continues to look strong. But cheese still trading under $19 has me, or excuse me, $1.90 has me a little bit concerned. 187 today, no change on the spot barrels. Cheese down 1 3/4 penny on the blocks, 189.75. Would like to see some better advantages there. Producers should kind of take a good look at this. The first 3 months, including the January contract right now, average price 20.64. That's worth hedging some milk, protecting, defending in some capacity. As far as those back months, we want to be patient. We're just not sure. I'm not sure how to get my hands around bird flu and what
Mhm.
impact that might have in the more the first quarter, later first quarter, second quarter on milk. It seems that's a real wild card right now.
That's a great point. Brian, as we close it out today, anything final you would mention or reiterate to folks?
I would just reiterate, be strategic in your approach. It's going to be hard to outguess weather in South America, the USDA report tomorrow, politics, the new administration. There's a lot of things kind of coming at you. Um, the biggest maybe weather in the southern hemisphere. So just look for that balanced approach. I've talked about that before. If a little heavy on cash inventory, consider on corn lightening the load some, maybe in beans as well. Look at fixed risk reownership. Be ready for the market to move in almost any direction.
Brian, if folks want to reach out and have a conversation with you there at Total Farm Marketing, a few ways to get a hold of you, how can folks reach you?
The first thing I'd like for them to do is try 800-334-9779. That's our phone number. I'd like to, again, hear what people are asking and saying, if that makes sense. And then you can email me, Brian with a Y, at totalfarmmarketing.com. Or you can check out our website, totalfarmmarketing.com. We got a lot of great resources there. And then lastly, the thing I want people to know is to cheer on the Packers. So go Pack.
I was just going to ask you, final question. Will our Green Bay Packers get a win over the Eagles coming up this weekend? I'm excited to watch that game, and I'm hopeful, Brian. I'm very hopeful.
I'm hopeful. The Packers have been in a downtrend the last 2 weeks.
Yep.
Eagles have looked pretty solid all year, so we're hoping for good things. But yeah, so we're excited about that. Thus, this.
The Packers had today,
Yes,
and
sir.
I'm with you. I'll have my vintage Brett Favre jersey on this weekend, I'm sure. Cheering them
10-4.
on. Brian Doherty with Total Farm Marketing. Great to hear from you, my friend. Thanks for joining us, and we will talk to you next week.
Awesome. Thank you very much. Have a great day.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.